Hello all, welcome back to Trade Sadhana. Today I'll be doing the weekly review of from this week. So without any delay, let's start over. So this was my which is October 7th trades. So before going here, let's go over the Monday's trade. Monday I did not take any trade because I was off the market for almost 2 weeks and I was not in sync. So before jumping on to the trades, I usually take the virtual trades just in my head just to see that how well I'm performing or how well I'm reading the markets. So this is the chart of Monday, which is October 6th. The one on the left side you see is for 1 minute, and one on the right side is for the 5 minute. So both are same, but it's just a different time frame. I like to see both the time frames while I'm trading. So Monday usually I'll go with when the price breaks out of the range. So this was the previous day high plus the previous week high. So from Monday to Friday, it's the weekly chart. So I'll go to the weekly chart, I'll mark out the high and low. I'll go to the daily chart and I'll mark out the day's high and the day's low. So based on that, this was the previous week high, as you can see, PWH, and the same level was also the previous day high. So my bias for the day was that I'll see how the price action is on this previous week and previous day high. If it breaks out, then I can see some continuation to the upside. If not, if it breaks this range here, or the order block, I like to call this as an order block or the resting candle. If you go and watch my previous videos, you can see that this is the rally, base, and rally. So it's one of the chart patterns. If this breaks out of this base, then I was looking for puts. So this day I did not take any trade, but I was taking virtual trades just in my head. So as soon as the market opened, once this 917 candle broke out, I just visually entered for a call trade, and which stopped me out right after 2 minutes. Then once it came down, once it came back again for the second time around 923, I again took virtual calls and again stopped me out. But I should have been more careful by watching the 5 minute. The 5 minute did not close above this previous week high or the previous day high. So I should have been more patient, so that this trade I should have not jumped in, but still I did. So now I have two losses back to back. And once it broke out of this in this 1 minute day's low, I entered for a put virtually. Again, these are all virtual trades just going on in my head, but not the live trades. As soon as I entered for the puts, again it stopped me out here, right? Because it's not going in the favor, so I had to take the stop. So this day, all three of my virtual trades took a loss, so I did not take any trades. I just sat out. But as soon as this price action closed here right above the previous week high with decent volume, and look at this 5 minute close, how well it was. This was where my third trade was. Once it broke out of this, the whole day it was giving the nice continuation all the way to 24,415. Look at here, and 24 25 200. It was a nice rally on that day, but unfortunately all three trades was in the first 15 minutes. So well, that is trading. So now going on to the next day, which is Tuesday. Here you can see that I took one. Usually I take 3 trades in a day. If 2 trades are losing back to back, and if it is still within my risk, then I'll go on with the third trade. If not, I'll conclude the day and I don't take any more trades. So Tuesday was pretty okay. I think I made around 300 rupees, and excluding all the charges, I was just up $100, which is nothing. But my aim was to get back in the momentum of taking the trades and reading the market right. Okay, let's go here for the Tuesday. Okay, Tuesday my thought process was the same. So now this was the previous day high. Same. Once it broke out of it, I'll look for a call. That's my game plan. I think I did the same here. It was nice. Nice. It gave a nice rally on Monday. So I was expecting how the price behaves, and I have a key level here from 25,200 to 25,180. I want to see how the price reacts here, and then take the trades right from there. So my first trade was for the put side. 25,100. I went on with 2 lots, and my entry price was around. I entered for put around 919. Okay, why did I enter for that, or why did I take that put? Why did I take that contract? So that why is an important question that you should ask yourself whenever you are taking any trades. So going back to this, 919 was my first entry. 19 right on this red candle. Okay, here as soon as it broke out of the first 1 minute candle, so then I thought that okay, it might not sustain, and it was below the previous day high. Again, this is 1 minute, this is 5 minute, both you are looking at the same chart but at the different time frame. So I entered for a put and I got stopped out immediately, and I think my entry was around 109, around 919, and I got out immediately. Around 99 rupees, and this exit was 922. Right after 3 minutes, I got stopped out, and that was my first trade, which was a stupid mistake. I should have waited much more, see how the price action reacted. And one more thing that triggered me was that first 5 minute candle. You see this? It showed me a weakness, that this key zone that I have, it's not sustaining. That's what I read during that time. And that's the reason why I entered for the put side here, expecting the continuation up until the 25 145, and then it might rally up, but it did not happen. It stopped me out, and I got out around 922, somewhere here. Then comes my next trade. My next trade was again with two lots. I entered back 25 200 calls for 103 around 923. Right after closing this put position, I entered back to the call side, which I should have not done technically, because I like to take at least 3 to 5 minutes of gap from closing out of one trade to the next trade. I mean, these things will be happening. You'll be breaking your own rules. That's why you have to develop a discipline in trading. So my entry was around 103, and I entered around 923, which is this candle here, 923, on this pullback, which was close to the high of the day. And my stop loss was at the low of the day. And I was watching this 5 minute, which was looking really good. As soon as the price came down here, I can see in the tape, I mean time and sales. Time and sales is nothing but where the orders are shown, which are executed in the market. Based on that time and sales, you can see the price action. If you want me to do a whole different video on level 2, on how to read level 2 and time and sales, just let me know in the comment section. I'll do the video on based on that. So my entry was around 923, where I saw this 925 candle. As soon as it came down here, it was stepping in, and they were. And once the candle closed right above this VWAP, the pink line that you see is the VWAP. I entered for the calls with two lots. Yeah, with two lots around 103. So then I think I got out one of the contract around 110 rupees, around 940. So I held through almost 10. So my entry was somewhere here, and my first exit was around 940, which was this candle. I held through this pullback. This buyback on this next candle with the green one with increased volume gave me confidence to hold the trade. So my next exit, so now all I left was with one lot, and next lot I exited around 120 the price, the 9 at 947, 7 minutes after my first exit is around 97. On this push high, I got out. My first exit should have been somewhere here and hold the runners if it goes higher than 25 283. But because of this 20 minutes hold, I was being impatient. It's what made me to get out of the first contract earlier and the second contract as soon as the push higher, because the volumes were getting increased, which is a positive thing. I should have held longer, but at that moment I felt that okay, it might give a pullback and then go higher. Okay, this day I netted around 122 rupees, because the first trade was the losing trade and the second trade made me back with some positive. So this was a red to green day for me. It's a win-win, because I was not in the market for a long time, and I'm getting in sync. This day market gave us one more opportunity. Right from this level that I had, 25 to 83, it sold off right up until the previous day high, which was around here, around 25 200. It sold off. So it's a nice break and retest. If you don't know what's break and retest, I have a complete video on that in my YouTube channel. Go check it out. So the price broke out of the previous day high with the proper displacement and came back, retested to the previous day high with a nice price action, and pushed all the way to the day's high and above. This was a cleaner price action. Whoever is trading after 11 o'clock, this is really good for them. I usually trade in the first 2 hours of the market open. So this was a clean day. I was watching the market, and this was a really nice push. Now coming to Wednesday's trade, which is October 8th. I was net loss of 250 or the gross of 86, including the taxes. It was minus 250 rupees. This was a stupid day. I usually don't trade after 11 o'clock, but this day I took the trade after 11 o'clock. I think that's why I broke my own rules. So I think and market was not good to me, I guess, or I should have followed my own plan. My first trade was for the call side, and second trade was on the put side. Market was really good on that day. I was able to read the price action really well. So my first entry was around with two lots. Two lots I entered for a call for 108 on 922. 922 was right here. So I usually wait for the first 5 minutes to close, so that's I'll see how the strength, which way the strength is. So my entry was on this pullback around 922, where you can see this first 5 minute, it exactly bounced from that previous day high where it bounced off. Look at here, bounced off. Price opened down here. The buyer stepped in and they pushed really strong. Should I have entered earlier? That's my opening drive play. Opening drive gives you a high reward. At the same time, it is high risk as well. So I like to take the high risk only if I have cushion. From what do I mean by cushion is the profits from my previous trades. This day I was like, this is my first week, let me take it slow. So I did not enter for the opening drive, but that rewarded really well. But I entered for the 5 minute range breakout. So after the first 5 minute, I think my entry was around 922, right in this pullback, and my exit was this level 25 to 83. Because why? The market sold off in that region yesterday as well. So my first exit was around 115 rupees on 924. I got right after 2 minutes. It was reverting really well, but I should have been more patient. 924, right on this strong green candle. That's where my was first exit, and I think my second exit was on this right at the level where it sold off around 25 to 83, around 927. Yeah, right on that push. I got out around 910. Yeah, I think the price was pulling back. I should have been more patient. Probably I could have captured up until 920. I think the price did went for 920. So these things will happen. You panic out because why I got out with the low premiums, because this was 115 and 917 did push higher, but it was not continuing. And I was afraid at that moment, because you don't know what will happen. Right now, once the market is closed, you can talk about it. Okay, your strategy works 100% of the time, but during the execution it is different. Your mindset is different. Your thought process is different. You're afraid, you're getting FOMO because you're missing out something. A lot of factors will add up during the execution. You can remove all that fear only by sticking to your plan. And that's why I'm like, okay, maybe my entry is too late, because my opening drive would have been paid really well if I had entered right after the market open. But my entry was good, and I got something. I got out, so I was happy, because at least I held up until the profit target that I had. But the stupid thing that I did was that I went on with one lot which is out of my time, which is around 921. Okay, why? Because I got FOMO'd. I thought that I'm missing out a lot, because look at this sell off right from that my key zone. This was a nice play up until the low of the day. Look at this. So it sold off really well. It pushed lower. Like, okay, fuck, am I missing out? That was my thought process. So that made me enter around 9, 11, 20. Look at here. So that's why you should not, your head should not be in control of your head. Your brain should be in control of you. I bought at the very low when the move has completely happened, right around here, which was so stupid. I think from the first trade I was up around 1,000 rupees. On the second trade, and I got that 1,000 rupees with two lots. Here I felt that, okay, I'm breaking my own rule. Maybe the sell-off has happened already and I'm entering the party too late. That's why I went on with one lot. As you can see here, see, it was just 75 quantity, which is just one lot. So I went on with one lot, which is right at the bottom. I'm buying high and selling low, losing money. I think I entered somewhere here and I exited, took my loss here. So that's why, once you have something, have to be more patient. Don't take action because you think that you missed out. Now going to Thursday, which is October 9th. This was I should not say bad day, but this was not a good day from my end, because probably I was impulse. I think this was October 9th. I lost around 3,500, roughly 3,600. With the charges, it was around 3,800. I took 3 trades. I stuck to my rules. My first trade was good. Should have been more patient entering on the next 2 trades, because it did work out later, but not at the moment that I entered and exited. So going back to my first trade, I entered with 2 lots around 112 rupees and on 917. So I took the opening drive because the market opened around 915, and my first trade was around 917 right here. Because yeah, I usually like to see the previous day high or the low breakout, because this day I did not wait. My thought process here was that okay, if I entered here, at least I could capture up until the yesterday's close, because usually sometimes that happens when the market gaps up, it comes back and fills the gap from the yesterday. And I had a key level which was 25,485, which was the important key level that I had from Monday. And let me know in the comment section that if you want to see a breakdown of how I draw the key levels, so that you guys can also follow through. So my first entry with 2 loss for the put side, as soon as it broke out of this 25,145, because my thought was that okay, yesterday it sold off really well, right? Look at here, this is Wednesday's chart. It pushed higher, came to that 25,283 and sold off aggressively. Again on the midday, it pushed higher to this key level, which is around 25,200, and sold off again. And my thought was that okay, even today it might not sustain, and because it's making lower lows, right? It's the market structure. Sorry, higher, lower low, lower low, right? So then I thought that okay, it has gapped up, it might fill the gap at least, even if not, if it's not flushing really bad. So my entry was around 917 with 2 lots, and I got out the first exit around 919, 2 minutes right after, for 120. I think I captured around 8 points, which is nothing. That's why if I'm going with the opening drives, I like to exit pretty soon, because it might not reward, or you don't see the continuation that's happening. So I got out with 120, and the remaining 1 lot I got out with a slight loss, which was around 105, because my entry was around 112. My first exit was 120, and my second exit was 105. I think I was up almost I think 500 rupees on this one. Then comes my second trade, which was 924, 4 minutes right after my closing my first position. I entered for the put side, sorry, for the call side around 924, around 116. 924 was somewhere here. Yeah, I entered at the high, so I was hoping that it might, which was here 924, right? It might push like yesterday and then sell off right from there. That was my expectation, so I was ready to capture from here to somewhere here. So that's why my entry was around 924. I went on with 1 lot, I guess. No, I went on with 2 lots. It did give me some profits, but I was expecting that to come here and then sell off, so I was holding my position. I did not even partially exit or close one contract and leave the rest of the runners. So that I took ahead because my entry was around 115 and I exited around 106.90, and my exit was pretty soon. It was 932, which I held because it was giving me in profit, because my entry was around 924 here and exit was around 934 on this pushback here. 934, yeah, here. My stop loss was somewhere here, so I exited here. My entry was somewhere here. That I took a hit because there were 2 lot. I think the premiums were also slightly volatile, and I was already down close to 1800 on that day on this second trade. Then I was like, okay, I should be more cautious because this will be my last trade, because I usually take only 3 trades in a day. And my third trade was also for call side. I think I went on with the same contracts. See, as you can see, 25 100, 25 100, 25 100. So I got back in the same contract around 938. Okay, why did I got in around 938? Usually what price does, okay, you see here in the 5 minute, this is the huge red candle, and then comes the green candle. I mean, now you can tell that okay, why did I take? But at that moment when I was watching, look at that 5 minute. So look at this 5 minute, right? It was wicking out right from the VWAP. What I thought that okay, there is strength, that it is retesting the VWAP, buyers are stepping in and it might push higher. Okay, that was my thought process, and that's where I entered around 938. I got in here right in this candle, and I expecting that to break out of this key level that I had, which is 25,200, and break the high of the day at least up until this level here around 25,220, and take the partials from there. So I got in with two contracts, and I think that also did not worked out really well, and I got out. 95 rupees. This was more than my stop loss, because I usually target to get out at 10 rupees and target 20 rupees on the premiums. But this time I gave out much more. Why? On this third trade, my head was telling me that no, I have to make back the loss. I had to close the week green. That greed kicked in. So I was holding my position. My exit was around 944. 944 was, yeah, on this candle. So my entry was here. I should have exited when it came close here, but I did not. Why? Because I was greedy. I lost first two trades. My head is telling me that no, this trade, it has to work out. It has to work out. The candlesticks are speaking. Just hold on, just hold on. But no, then it reached above my risk of the daily loss, so I had to close the position. But then look at what happened. It came to 245. It held really well and pushed all the way to 25 to 83. The same game plan that I had here, my last trade, it did work out. It came back, retested, and pushed really high. What would doesn't make you money in trading. Okay, what did you do at that moment gives you money. But yeah, overall, I was happy, and I had other stuff to catch on that day. So like, okay, whatever. It came right down to the day's low, held pretty well for almost 20-30 minutes, and then pushed really strong. This was a nice move. Same contract that I had my last trade. These two paid really well. I think it went almost to 200 from 110, and that was my initial entry. But I was happy. I stick to my rules of three trades. Maybe I should have exited much earlier than on the last one, because look at here, on an average, my stop loss, see, my entry was around 116, let's say, and my exit was 106, which is around 10 rupees. But here I gave around 15 rupees. Probably I could have saved around 500 rupees on this one, and that did the around minus 300 rupees, which is fine. It's a part of trading. It will be highs and lows. Okay, now coming to Friday, I usually size down on Friday. What do I mean by size down? If I'm going with 3 lots, usually I'll size down to 2 lots. Or if I'm going with 2 lots, usually I'll go with 1 lot. So today, Friday, I wanted to end the green with a good note. So I went down with 1 lot. Today it was pretty decent. It was pretty awesome. My read on the market was good. It paid really well. Okay, this was the previous day high, and this high was from the Wednesday. As soon as it opened, the first 1 minute itself, it broke out the previous day high, which was this guy, and it retested really well on the second candle, or the resting candle, like I like to say, and pushed higher. So my first entry, I think this was my opening drive here. Yeah, my first entry was 919. I entered around 916 or 917, but this is good. I was waiting for the confirmation because I had a big loss the Thursday, which was around minus 3000. Today I did not give away more than what I have, so I wanted to get in sync with the market. So I went on with 1 lot around 109, the contract price around 919. Sorry, 918. 918 was here. Yeah. Once this push has happened, I got the confirmation that okay, the buyers are there, they are aggressive, they're pushing the price higher. If it breaks the Wednesday's high, it might go up until my next supply zone, which was around 25,440. So my entry was around somewhere here, and I held. I think my exit was somewhere here around 930. So this was a good hold because I was patient, because I went on with 1 lot. If I had 2 lots, then my thought process would have been, because if it goes against me, I'm giving away much more than what I had in my mind, right? Because it was 1 lot, I was okay with it. As soon as I entered, it was rewarding me really well. So 925 was my exit, because it was 1 lot, so I completely exited my position. I should have been, if I was more patient, then this contract, the $100, went all the way to 210. That was the high up until my, if I had held up until my supply zone, right up until here. See, look at here. In 1 minute, it's clearly making higher highs, lower lows, higher highs, lower lows, lower highs. Sorry, and it reached all the way to my supply zone. Even if not, if I had held up until my this pivot points, which is around 25,394, that would have been rewarded really well as well. I think up until here, it gave me around 170, and my entry was around 110, let's say. Yeah, 170. So we were almost 60 points. but I got out with just 30 points. 30 points, not even 30 points, I think it's just 20 points, yeah, which is okay. So you cannot be perfect, you cannot enter at the bottom, catch to the top. It's ideal, but it doesn't work in trading. Okay, that's why having multiple lot might have helped today. If I had taken two lots, my first exit would have been somewhere here, my second exit would have been somewhere here, which was really good. Right now I have some cash that I have secured from this piece, and even if it was against me, I would have closed it still green, because I was not giving away whole of my thing, right? But overall, it was a good day. I liked it. My read on the market was good, and yeah, it netted me around 1600 for the day. It's a pretty good day, pretty good week, and I think I'm still ending my week in red with minus, closely around minus 1600 or so. But I'll come back strong. I'll post my key levels and what to watch for, what to look out for the next week, so that we are all ready. And yeah, thank you for watching my video. We'll catch up in my next video. See you.